Hello, everyone, and welcome to the Texas Mortgage Bankers Association's Education Webinar Series brought to you by the Education and Endowment Committee, led this year by co-chairs Hannah Barton and me, Stephen Bertrand. I'm excited to moderate today's webinar titled Texas Legislative Update, Key Developments in Mortgage Lending and Regulatory Landscape. Before we get started, I want to remind you about one of our exciting upcoming in-person events. The Southern Secondary Market Conference will take place on February 10th and 11th at the beautiful Omni Houston Hotel. This is one of our premier annual gatherings, bringing together industry professionals from across the region. Registration is now open, and we'd love for you to join us in Houston. Visit texasmba.org for more details and to secure your spot today. We encourage you to participate in today's session. Feel free to ask questions throughout the webinar using the Teams Q&A feature, and we'll do our best to address them during the Q&A session or at the end. Now, I'm pleased to introduce our speaker, Mayor Fowler. Texas Capital veteran Mayor Fowler has joined the Texas Mortgage Bankers Association as General Counsel. She will lead the Texas MBA's governmental affairs team after a successful tenure with the Texas Cable Association. Mayor Fowler brings industry knowledge and experience along with a passion for our association and its members, in her new role. We are grateful for the leadership and stability that the association has enjoyed for nearly 14 years under John Fleming. And with Mayor Fowler, we are excited about the future, said Texas MBA President Jody Cockrum. I'm grateful for every past experience from which I have learned throughout my career, and I'm thrilled to join the Texas Mortgage Bankers Association, Fowler said. I believe great industries do not become successful because of a single person. Success is maintained and grown through a team of people. The Texas MBA has earned a long-standing stellar reputation. I'm excited to continue the great work on behalf of the Texas mortgage industry. Prior to joining the Texas Cable Association, Fowler spent almost 7 years as legislative counsel for the Independent Bankers Association of Texas. She also worked a year as a lobbyist with Tuggy, Rosenthal, Purstein, Sandalowski, and Agather, LLP. Inside the Texas Capitol, she was an attorney and policy analyst for then House Speaker Joe Strauss for almost 7 years. She also previously served as general counsel for State Senator Kevin Eltife, chief of staff and general counsel for the Representative Peggy Hamrick, and a legislative assistant for State Representative Brian McCall, a graduate of Texas State University. Fowler earned her Juris Doctorate at South Texas College of Law in Houston. We appreciate Mayor joining us today to provide an update on these important legislative and regulatory developments. Reading her bio, I made an error here. Prior to joining the Texas Cable Association, she spent almost 7 years as legislative counsel for the Independent Bankers Association. Anyway, without further ado, I'll hand it over to Mayor to begin the presentation.
Thank you very much. I appreciate the nice introduction. Let me share my screen for the slides here. Can y'all see my screen?
Yes, and you'll want to select from beginning at the top left there. You got it.
That's good. Okay, perfect. All right, thank you everyone for joining us for this webinar. I know everyone's really busy. I have a lot of information to share, so I'm going to move kind of quickly, but we will send this slide deck out to you, and we're also going to send a presentation that Savings and Mortgage Lending did on the mortgage rules, because I'll just be highlighting a couple of things of those, but you'll get a more detailed presentation that we'll send your way. Here we go, speakers race. So there's been a lot of drama, and y'all may have seen some headlines in the news, and I think the local news has covered. Dade Phelan, who was speaker for the past 2 sessions, dropped out of the race in December, on December 6th. There were lots of rumors swirling around about who was going to be speaker. He had one challenger who was David Cook out of Mansfield that we already knew about, and a couple other people had challenged him, but they had dropped out at that point. As soon as he declared he was no longer in the race for speaker, rumors were swirling, and they settled down to two names, David Cook and Dustin Burrows. You can see the statement in part that the speaker released. He said that serving the Texas House was one of his greatest honors, and he thanked everyone that supported him in his speaker's race. He will continue to serve his district as a regular member of the Texas House. You guys probably saw that that session convened on Tuesday of this week. Both the House and Senate convened at noon. After the members were sworn in by the Secretary of State in the House, they proceeded with electing the new speaker. The race had boiled down to Dustin Burrows and Representative David Cook. There was also a Democrat in the race as well, but with the Democrats being a minority as far as numbers, there really wasn't a chance that she was going to win. So it was really more between Dustin Burrows and David Cook. It took 2 rounds of voting for someone to reach the 76 threshold, which is the majority needed or more to become the speaker. And in round 2, Dustin Burrows was elected, and he got 85 votes. Representative Cook received 55 votes. And then there were 9 members who voted present, not voting. His winning coalition was made up of 49 Democrats and 36 Republicans. And typically when session starts, like the first week, they'll go ahead and debate and amend and adopt the House rules that govern the procedures of the way that the House runs on the floor. But that has been pushed off to next Wednesday because a lot of the members are going to go up to DC for President Trump's inauguration. And the next thing, aside from the speaker figuring out who he is going to have on his staff, is picking out committee assignments. It's a really daunting task because there's 149 members. You can see there are 88 Republicans, 62 Democrats. And typically, a speaker will take into consideration R's versus D's on the committee, male versus female membership, the regions of the state that are represented on the committee. You want to balance it between urban and rural, between like metroplex areas and, West Texas or East Texas. Don't necessarily want a committee that's talking about county issues or rural issues made up of a bunch of urban members. So you try and be mindful of kind of having an even population on all the committees. The House has 34 standing committees, 8 select committees, 1 investigative committee, and then 5 joint committees where the members are made up of both House members and Senate members. And select committees are interesting because it's usually headline issues, and a committee gets created to study those issues and hear issues related to things specifically, like the Select Committee on Protecting Texas LNG exports. And there's a select committee we had our eye on was securing Texas from hostile foreign organizations, which is where the foreign ownership legislation and those issues were discussed. Typically, committee assignments will come out, could be late January or even into mid-February. Oftentimes when a new speaker comes in, they want to shuffle the committees that the previous speaker had. So again, it's a big kind of logic puzzle, and sometimes they take a little bit longer when there's a new speaker. The Senate also convened on Tuesday. And again, the Senate does the same as the House and usually discuss and debate and amend their rules that govern the way that their body works. And Lieutenant Governor didn't have to deal with anything like the speaker's race since he is a statewide elected official. He's not elected by the members, he's elected by the public at large. An interesting little quirk is the Senate and House are subject to what we call the 60-day prohibition. So in the state constitution, for the first 60 days of session, the Senate and House are only allowed to pass legislation related to the governor's emergency items. We'll get to that in a second. But the Senate currently has 16 standing committees, 6 select committees, 5 joint, and 2 special committees. And you see the breakdown, 19 Rs and 12 Democrats. And if you want to keep up with session, you can watch hearings, you can watch the floor proceedings, you can track legislation on your own, you can look at how many bills have been filed. It's a really intuitive tool and a vast tool that allows you to even set up alerts for specific bills that are going to be heard, so you can know when they're going to be heard in committee. Just go to Texas Legislature Online, or what we refer to as TLO. We are hearing rumors that Senate committee assignments may come out Friday, and then bills may start being referred to committees on the Senate side by next Wednesday. I mentioned emergency items earlier. So in mid-February, the House and the Senate get together in a joint session, and the governor will come address all the members. He'll lay out his emergency items, which are basically his legislative priorities. And again, during the first 60 calendar days of session, members are only allowed to pass legislation related to these legislative priorities. Now, committees can go ahead and meet, bills can be referred, they can talk about other issues, they just can't pass on the House or Senate floor anything that's not these emergency items. The number of bills just depends on the session. 2019, there were only 10,000 bills, but last session there were 11,800. So far, there's 2,657 bills that have been filed. I know a lot of people were waiting to see, a lot of lobbyists are waiting to see who the speaker was going to be and who supported whoever won, so that they could go to the members that were on the speaker's team, if you will, to get them to carry their legislation. So I think we're going to see an influx of lots of legislation being filed from now on. And the filing deadline is March 14th. So bill filing started November 14th and it ends March 14th. So we've got about 2 more months of thousands of bills to be filed. Speaking of legislation, we can get on into it. So the House and the Senate are given by their leadership, aka the Speaker and the Lieutenant Governor, they're given during the interim, when they're not in session, what are called interim charges. These are topics for the committees to study, and that often leads to legislation being filed in the next session. So one of the issues that's been in the headlines a lot and been discussed by our members quite often is the impact of increasing homeowners insurance. So the House and Senate were given interim charges to look at this. House Committee on State Affairs, Senate Committee on Business Commerce. You can see the House charge there. Look at the impact of current economic challenges, escalating costs, investigate solutions to help affordability. And the Senate one is assessing the impact of property and casualty insurance costs on property owners, real estate lenders, commercial, industrial development. Look at ways to better help and educate consumers. And interim hearings are often mainly educational. So different people from like TMBA, the realtors, the Builders Association, different segments that represent the Insurance Association will come and just talk about what they're seeing, what we're seeing in our respective industries with regard to the insurance marketplace. Now, some legislation has been filed to help start looking at issues within the insurance marketplace. And I won't say that the bills that have been filed so far are low-hanging fruit, because everything I think related to insurance is important. But these are legislation that are kind of getting around the edges of the apple, if you will. And I think we're going to see a lot more legislation filed to really try and figure out ways to address the rising costs. But Senator Schwartner, who chaired Business and Commerce last session, we'll see what he chairs this session, see if there's any shakeup on the Senate side. He filed an appraisal dispute resolution legislation. So this would require the TDI commissioner to adopt rules to deal with disputed amounts of loss between policyholder and insurer. The legislation requires the TDI commissioner to allow flexibility for adequate investigation and preserving independence of appraisers and timelines for getting the appraisals done. And his legislation would require, whatever the rules end up being, that every insurance policy in Texas has to have this provision in it. And the amount of loss determined by the appraisal would be binding on the parties unless there's an instance of fraud or material mistake. And this would only apply to new insurance policies or renewals after January 1 of 26. Continuing with insurance, Senator West filed legislation basically to do away with requiring bundling when we were preparing for the hearing on insurance in Senate Business and Commerce, I was talking to an insurer, and he was saying that their reinsurance companies are telling the insurers, we need to cut costs. So you guys need to start bundling like home and auto, sometimes even life insurance. Um, and so Senator West filed a bill to outlaw that practice. That would be a deceptive practice to require bundling or to require someone to purchase, a personal or auto or personal property line or casualty insurance as a condition of getting another line of insurance. Continue with insurance. This legislation doesn't apply to Texas windstorm insurance policies, but this lays out a process to deal with disagreements between policyholders and insurers. So if there's a disagreement between the two, it allows either the policyholder or the insurer to provide a written demand for appraisal to the other party. And the policyholder is prohibited from filing an appraisal demand if they've already filed a lawsuit. And the insurer can't demand an appraisal if they've already given an original answer to the lawsuit. But the insurer can include an appraisal demand within its original answer in the lawsuit. And then the lawsuit can be abated until appraisal is complete. Moving on, the policy and policy holder and insurer can pick impartial appraisers, and if they agree, that's great. They'll issue the written notice to each side, bing, bing, boom, you're done. If they don't agree, the bill lays out a process to appoint an impartial umpire. So the umpire will get all the records and research and go over what each appraiser decided. And then the umpire has to pick either one of the amounts or an amount in between the two appraisal amounts. And then once they determine, that umpire determines that, they got to get the thing signed off on by one of the original appraisers. And then expenses for that neutral umpire will be split between the policyholder and insurer. And then this also applies to new policies or renewed policies as of January 1, 2026. And one more that's been filed so far is dealing with replacement costs. So if your homeowners, renters, or condo owners insurance includes replacement cost provisions, in Texas, this would require the initial payment to be not less than 80% of the estimated cost to repair or replace damaged dwelling or personal property. And so once that documentation is provided and the replacement or repair is complete, then the insurer has to make the remaining payment. They don't have to pay more than the total cost to replace or repair. But this is getting money into the hands of the person who lost or has damaged property quicker. And then this one also is effective with new or renewed policies on January 1 of 2026. So we'll see how these play out. And I will say that Republicans being in the majority party have a little bit easier time passing legislation. However, it is helpful when you have bipartisan legislation. So we'll see where these bills go, and I will keep all apprised of any other insurance-related legislation that gets filed. I'm, again, anticipating a lot more on this topic as well. So the insurance conversation and increasing costs there kind of bled into housing affordability. And House and Senate committees also received interim charges to look at these issues as well. House Committee on Business and Industry received the following charge. Let's look at housing prices and rent see if there's any impact caused by institutional buyers and determine if there's any policy changes that are needed, if there's any advantages institutional buyers have over your regular buyer in the market. And then Senate Committee on Local Government received a charge to look at housing related issues, housing supply, homelessness, methods of providing financing for affordable housing, any regulatory barriers that need to be looked at. And again, the testimony in these committees was largely educational. The Real Estate Research Center at Texas A&M and the Comptroller testified, along with Apartment Association, Association of Builders, AARP. And the comptroller and the A&M Real Estate Association agreed that the main cause of a lot of the increased housing prices is a housing shortage of about 320,000 units in Texas, which they said will likely only continue if we keep the status quo as far as regulations, as more and more people keep moving to Texas. So there is one bill I plucked out that had been filed. Senator Hughes and Representative Astute each filed legislation to deal with restrictions related to accessory dwelling units or ADUs. These are like your mother-in-law suites or your casitas, usually kind of on the back part or like a side of a property. The pursuit legislation has some restrictions as far as county size and city size within the county. So I picked out Senator Hughes's legislation since it applies statewide. So basically, his bill lays out all kinds of regulations that the local subdivisions are not allowed to put on the ADUs. So he's trying to prevent the local subdivisions from regulating the heck out of the ADUs to make it too much of a hassle to build them and increase the number of housing units that are available. So this would prohibit things like allowing the local subdivision to say you can't build an ADU, limiting the size of the ADU, or having square foot regulations, or size, shape, or height regulations, or having regulations restricting occupancy based on relationship with the primary dwelling owner or based on employment. It does allow the local subdivision to apply short-term rental regulations to the ADUs, and it allows, but does not require, the prohibition of sale of an ADU separately from the primary dwelling, unless it's a condo or the condos are on separate properties. So it does allow a little flexibility for the local government there to prohibit sales, but we'll see if that gets tweaked during session. Permitting came up a lot in the discussions, and if anyone has built a house here in Austin, permitting can be a pain in the rump to deal with. So this is trying to kind of cut through some of the red tape that was discussed in the interim hearings. So this says, as far as if there's permitting required for the construction of an ADU, then the application has to be ministerially approved, no discretionary review, no hearing. And all they can consider is whether building codes are satisfied, design standards and fire codes are approved. And they have 60 days to approve the application. And if they don't approve it in that time, then silence means it's approved. So they're trying to speed up things for the ADUs. And this does allow a private right of action. So if a property owner wants to bring a private right of action against a local political subdivision, this bill will allow them to do that, and they can recover attorney's fees and costs. And if this bill passes, it would be effective September 1 of this year. Institutional buyers also came up in the interim hearings. And the House Committee on Business and Industry covered this topic as part of one of their interim hearings. And these two bills lay out, this bill and another bill I'll talk about after this one, lay out studies to take a look at who institutional buyers are, if there are advantages they have over your regular home buyer, just out in the market, and, kind of figuring out who they are, because sometimes, from what I understand and what was talked about in the hearing, family members will have recruited an LLC to buy a vacation home, or it may have a rental home or two, and they have an LLC for that. So in the studies, they were kind of being roped into being considered institutional buyers, and that's not really what I think the state is concerned about. So this bill, House Bill 287 by Caroline Harris Davila, would require an annual study and report on single-family home purchases by certain institutional buyers. You can see the definitions are going after, like corporate entities, general partnerships, LLCs, business trusts, REITs, and it's looking at any of these entities that purchase or acquire for rent 10 or more single-family homes in a calendar year. So they're, considering the corporate entities, and then if you've got 10 or more, then they'll be included in the study and take a look at who you are and what you're doing and where you're doing it. So they're going to look at the number of purchases, numbers acquired through foreclosure. They're going to look at the city and county in which it's located, appraised value, just kind of gathering information to see if this is harming the housing market. And the report has to include the impact of institutional buyers, see if they have any advantages over your regular buyers in the real estate market. And Senator Hinojosa filed a bill requiring a study by A&M Research Center. You can see institutional or corporate owners are defined very similarly to the previous legislation. And his bill actually caps the number of homes that institutional buyers can own to 10 single-family homes used or offered as rentals. It does contain exemptions for like affordable housing, charitable organizations, ownership as a result of foreclosure, or nonprofits. His bill does have an enforcement mechanism. So the AG, the county attorney, or the DA can investigate a violation. So if you're buying more than 10 homes, they can take a look at you. And if they're found liable, you owe $100,000 per home over that 10 home cap. And then penalties will go to the state's general revenue fund unless they're collected on behalf of the state and the municipality. It must be split 50-50. So the initial report has to come out next summer. And it's got to also create a database that keeps track of these corporate owners or institutional buyers. And it gives some time for a corporate owner to comply with the 10 home cap. So they got to comply by September 1st of 2027. Moving on to foreign ownership. So on May 6th last year, then Speaker Dade Phelan created the Select Committee on Securing Texas from Hostile Foreign Organizations. And the committee was formed to look at threats posed by hostile foreign organizations and related entities to the Texas economy, security, and values. And, just take a look and examine what's out there and what foreign organizations or hostile nations might own property that perhaps is close to a military base or telecom infrastructure or wastewater infrastructure. Just kind of looking at what's out there and who owns what. I've gotten some questions about why we care about this. We're just monitoring to make sure that the way the legislation is drafted, it doesn't rope us into situations where we would be put in a position to have a conflict with ECOA or fair lending standards, or having to discriminate against certain individuals based on where they're from. So there's a couple bills. There's 8 bills filed so far. You can see the bills listed there are or not maybe, they are ag related. So they're focused on agriculture land. This bill by Representative Spiller, an identical one was filed by Representative Patterson. These bills are basically refiles of a bill that was filed last session that John Fleming, the previous general counsel, and our real estate trade partners like the realtors and Texas Land and Title negotiated with Representative Spiller. So this would go after entities rather than individuals. So if there's an entity where the right to exercise more than 50% of an organization's voting interest, or to elect a governing authority or governing person of the organization, is held by a foreign entity, that's the target of this legislation. And designated country are those would be identified as a threat to the U.S. by the Director of National Intelligence on the last 3 annual threat assessments, and defines real property as land, an improvement, a mine, a quarry, mineral place, standing timber. It's things other than a mortgage or a deed of trust or a leasehold estate for a term of 5 years. So the following are prohibited from purchasing or acquiring title. It would be a government entity of a designated country, an organization headquartered in a designated country, or directly or indirectly under control of the government of a designated country, or an organization under control of an individual designated country, or entity headquartered in a designated country. So this is going to more the entity level versus going to individuals who say are from a particular area. This does allow for violations, the AD to bring in action and appoint a receiver and have a divestiture process so that the liens on the property can go ahead and get paid. So it's not just the properties left there, dwindling and lien holders are, out of pocket. The next bill, Representative Spiller also filed legislation. This one would authorize the Attorney General to initiate eminent domain proceedings against certain foreign owners of real property. It applies to property owned by alien, foreign business, foreign government, agent, trustee, or fiduciary of an alien, foreign business, or foreign government. And this is targeting property owned by a person or entity that's being used in violation of state or federal law or poses a risk to critical infrastructure, such as, you can see it listed, chemical, commercial facilities, communications, critical manufacturing, financial services, energy, emergency services, healthcare. So it's a very broad category of critical infrastructure listed in this legislation. Representative Cecil Bell also filed one, and this one is kind of interesting. Requires proof of citizenship or legal residency in order for a seller to enter into a mortgage or a rent-to-own type contract for residential real property. So the liability is on the seller, and they have to get proof from the buyer. It's via, U.S. passport, social security number, driver's license. And 30 days after you enter into a contract for the real property, it's got to be filed with the clerk in each county where the property is located and have an affidavit affirming the purchaser's U.S. citizenship. And a criminal offense under this is the Class B misdemeanor, and the penalties go up for further violations. So it would go up to Class A misdemeanor and then a state jail felony. The bill does not address all cash purchases. So this one is, I think, piquing the interest very much of the realtors as well as us. Senator Bob Hall filed one, and this one lists the countries of interest. So the following cannot purchase or otherwise acquire title or property in the state, government entity of China, Iran, North Korea, or Russia. Company or entity headquartered in those countries, or that's directly or indirectly under the control of any of those countries, or owned by or under the control of one or more individuals who are citizens of any of those countries, or a company or entity owned or under control of the company or entity described above, or an individual who is a citizen of any of those countries. And interesting, the bill also throws in a provision that prohibits governmental entity from entering into a contract or other agreement where public money is used with any of those countries. And then finally, we've been waiting on this one for a while. So Cole Hefner chaired the Select Committee on Securing Taxes from Hostile Foreign Organizations, and he just dropped his bill, let's see, maybe last week or this week. My days are all running together. But this would prohibit the following from acquiring title to real property. Again, government entity, designated country, a company or other entity headquartered in a designated country, directly or indirectly held or controlled by government of a designated country, or owned where the majority stock or other ownership interest is held or controlled by individuals in a designated country, or company entity that is owned by or the majority of stock or ownership interest is controlled by a company or entity of one of those designated countries, or an individual domiciled in a designated country. And he lists the countries there, the same ones as the previous bill: China, Iran, North Korea, Russia. But this is interesting. The governor, after consultation with the director of DPS and Homeland Security Council, can designate an additional country or however many he deems as a threat, in which an entity or company or other entity or citizen can be subject to this chapter. So that gives a lot of authority to the governor. And then company, you can see there, sole proprietorship, association, corporation, limited partnership, also includes majority-owned subsidiaries, parent company, affiliates of those entities. And then the offense and penalty: a person commits an offense if the individual is domiciled in one of those countries, which again, China, North Korea, Russia, Iran, and intentionally or knowingly purchases or otherwise acquires title to real property in the state, and it is a state jail felony. And then a company or entity that violates this law, if it passes, has to pay a fine to grade of $250,000 or 50% of the fair market value of the property. So these we'll be watching. Obviously, we have some concerns with a couple of these, and we'll be working with the realtors and title with TBA and with IBAT as well to try and make sure that we're not put in a position again where we have to the way the law would be written would require us to discriminate against certain individuals or violate Equal Credit Opportunity Act or any of the fair lending laws out there. And we have a meeting actually Friday with our real estate trade partners, and we're going to be talking about these bills as well. Cole Hefner's bill doesn't apply to an individual. He does have carve-outs for citizen, lawful permanent resident, citizen foreign country that is not one of the designated countries, or company or entity that is not under the control of individuals of those countries or any of the governments of those countries that were listed. Also doesn't apply to a leasehold interest in land or improvements constructed upon a leasehold interest. Does allow the AG to investigate, take a look and see if investigation is warranted. And if so, it allows for divestiture and transfer of the property and allows for sale of property as well. And the proceeds first have to go to any liens on the property, and then the remaining proceeds will be remitted to the comptroller to be put into the state's general revenue fund. And if this passes, it would be effective September 2026. So again, we'll be watching these pretty closely and working with our real estate trade partners. One thing I wanted to mention that was a refile from last session was creating some exemptions to the home equity constitutional amendment. So this would need, the legislation would need to pass, and then the constitutional amendment would need to be voted on by the voters. But this would carve out some exceptions to where the home equity loans can be closed. So right now it has to be at the office of an attorney, title company, or lender, but this will create exceptions for those who are out of state on military duty or deployment as a member of U.S. Health Service. They have a disability that affects their ability to be present or stay there and quarantine. This was, I think, originally filed during COVID times, but perhaps someone's getting cancer treatment or maybe a stem cell replacement related to different diseases, and they have to, quarantine at home and be very careful about their health, or they're incarcerated or under house arrest. And this doesn't make any mention, it's silent as to non-borrowing spouses. I don't know if this is going to have any legs. It didn't necessarily have too many legs last session, so we'll see what happens with this session. All right, moving on to SML rules. So I think everyone's pretty much aware that Savings and Mortgage Lending took a look at their rules, and they did a 141-page rewrite. I'm just going to mention some of the highlights. Again, we'll send you the slide deck from this presentation, as well as one that has been put together by SML that is much more detailed as far as the rules go. But TMBA participated in every step of the way. We did a pre-comment letter, which John Fleming helped me draft, and then Fleming and I talked to the SML staff, and then we did a final comment letter. I was at all the Finance Commission meetings, and I read all through the rules word for word to compare new language and old language. So basically, they took it upon themselves to help the rules coordinate better with the actual statutes or regulations. So Mortgage Bankers Chapter 157 is now Rule 57. So it's a little less confusing than it was previously. So this added some required disclosures. So for mortgage companies and mortgage bankers, disclosures from the finance code, you've got to capture and maintain records reflecting timely delivery of an application. Notice has to be signed and dated by the mortgage applicant. Originally, they would have required a signature from both of us, but SML we argued with them and they agreed with us to remove the, it may be signed and dated by the mortgage applicant, but it was a requirement in the original proposal. And we argued with them and they agreed with us and said, okay, they don't have to sign it, but they may if they want to. Also provides the consumer complaint notice required posting on websites, but removes that requirement to be posted on social media sites. And disclosures continued. The new rules require correspondence sent to the mortgage applicant need to include the website address and the NMLS ID. We had some questions from different members, so I reached out to SML to ask them about what about text messages and emails. So text messages they consider informal transitory communication, so it would not be required on that. And as far as email, they believe information included like in the initial email, if you can have the info in your signature line, you're good. So if the email chain going back and forth, if you have your email set to where you don't have your signature line in an email exchange back and forth, they would not consider that a violation as long as it was in, the first email sent to the applicant. So that was good clarification from them and good to know there's some flexibility there. And for mortgage bankers, 57-200 provides service or disclosure required by statute, must be in the form posted on SML's website. And I've got the links in this presentation for origination forms and for the servicing forms, and they're on the SML website. But I've got the links directly to them right there. Books and records. So requirements were expanded as far as mortgage transaction log. You can see, I won't read them all to you, but you gotta have the loan ID number, address of the property, interest rate, type of product, lien position. In addition, adds a new requirement to maintain loan processing and underwriting log if conducting third-party loan processing and underwriting services. There's about 10 new things that need to be included. You've got the list there, and it's pretty basic information, if you will. Name, NMLS ID, description, the current status, disposition of the application, dollar amount charged or paid, etc. Other changes they included the addition of FTC standards for safeguarding customer information rule to list other records required, as well as retention of records showing compliance with corrective action rule. You've got two there, and unclaimed funds rule. Also adds record retention requirements for home equity loan and home equity line transactions. Includes a requirement to maintain and record any discount point acknowledgement. And you can see the forms right there. Portable incidents. This was brand new. We kind of argued with SML about this. Unfortunately, they didn't listen to us. They listened to us on a little piece of it. But this requires reporting of security event and catastrophic event. You can see the definition. Security event is that resulting in unauthorized access to or disruption, misuse of information system. Catastrophic event is an event other than security event, unforeseen results, and extraordinary levels of damage or disruption to operations. So the original rule, SML wanted to require reporting of a loss of line of credit and loss of a third-party provider. And we kind of pointed out that that might cause consumer consternation. And what if it's not really a loss? What if you're just switching? So they agreed with us and took that out of the requirement. Trigger leads. So Fleming had brought this to SML's attention. He worked with them on language concerning trigger leads. And this means information related to consumers' creditworthiness compiled by a credit reporting agency, obtained in accordance with Fair Credit Reporting Act, not initiated by the consumer, but is triggered by an inquiry to a consumer reporting agency in response to an application for credit initiated by the consumer in a separate transaction. Doesn't include a consumer report obtained by a licensed mortgage company or registered mortgage banker. And then some things to be aware of. If a trigger lead is used by a mortgage company or mortgage banker or a sponsored originator, the initial communication must include originator's name and NMLS ID, name of the mortgage company, mortgage banker, brief explanation of the trigger lead, statement that the originator is sponsoring his or her sponsoring mortgage company or mortgage banker is not affiliated with the creditor with which the consumer initiated the credit application. Explain that the purpose is to solicit new business, and it must include a firm offer of credit. Firm offer of credit means an offer of credit or insurance that'll be honored if the consumer is determined, based on consumer report, to meet specified criteria used. And the rule specifies it's misleading or deceptive practice for an originator, mortgage company, or banker to fail to provide that required information in the initial communication. And it's also misleading or deceptive practice to contact a consumer who's opted out of pre-screened offers of credit or to fail to make the firm credit offer in the initial communication. It's an improper practice to solicit someone who has put their name on the do not call list. And then I've got related to fraudulent, misleading, or deceptive practices, the different sections of the rules that apply to trigger leads there. So all the rules are in effect now, except for the 3 that you see here. Their effective date is next January. And I've got a link to the Secretary of State's office where all these rules are located to make it easy for you guys to find that if you want to read through it. Again, we're going to send you this presentation, and we're also going to send you the one that SML put together that is more detailed on all the rules. 141 pages I just picked out and highlighted a couple I thought were important. We could probably spend 2 hours going over all the new regulations, but I wanted to make sure you had the link there. So thank you to everyone who was able to join us today. Again, I just hit some highlights of stuff that's going on. I do weekly updates of legislation that has been filed, legislation that will be moving during committee. So look out for those. And again, if you want to keep up with what's going on with the legislature, go to Texas Legislature Online. I've got the website for you there. Again, it's pretty user-friendly. I use it oftentimes myself. And if you ever have any questions, if I can try and clarify something for you, or you just want to, know the Capitol gossip, feel free to email me. You've got the email address right there. Again, thank you everyone for joining. I know everyone's super busy. I'd be happy to try and answer any questions if there are any questions.
Thank you, Mayor. And we do have one attendee question so far. Please feel free to ask questions using the Teams Q&A panel at the top. So here's the question. On the speaker's race, can you talk about any potential impact on the rest of the legislative session, since there's a clear divide of Republicans in electing speaker? Maybe no impact.
Yeah, I think there's going to be impact. Typically, speakers will look at who supported them in their race when they are determining committee appointments. And I can't speak for Speaker Burrows, but in my 21 years of doing this, that I've seen a couple different speakers. If you did not, I'm trying to be diplomatic. If you were not on his team supporting the speaker, your committee assignments tend to be less interesting than perhaps what you had requested that you wanted to be on, and your bills sometimes might struggle a little more, take a little bit longer to pass, or sometimes maybe not pass. But you're right, there definitely is a divide within the Republican Party. There's also a divide within the Democratic Party as well. Maybe some of those tensions can be softened as session goes on. And oftentimes it's cool to hear legislators on the floor. They'll, have a desk mate that maybe have different beliefs or be from a different party than they are. They'll end up being great friends with them, and they'll realize that they actually kind of agree on more than they thought they would. So hopefully, maybe just with the process of session and socialization and friendships going on and getting to know people and know their background a little more, maybe some of those tensions will soften. However, I think there will be not as much, consideration to committee assignments or requests, maybe for those who did not support the current speaker. I could be wrong. He could be like, you know what, that vote happened. it was 10th. Let's be done with it. History tends to play out the other way. So we'll see.
Great. Thank you, Mayor, for that helpful response. And we appreciate you sharing such a thorough and informative update on the latest legislative changes affecting the Texas mortgage industry. Your insights are invaluable for helping us understand the evolving landscape. And thank you to everyone who attended today's webinar. We hope you found the information insightful and gained a clearer perspective on the legislative and regulatory environment in Texas. The Texas Mortgage Bankers Association is committed to bringing you valuable content through webinars like this one. Please be sure to visit texasmba.org to explore upcoming webinars and access recordings of past sessions. Thanks again, everyone, and that concludes our webinar. Have a great day.